Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you as we jack up on all the events in markets last week and look to the week ahead. It's going to be a very interesting night, I think, in the US tonight. We'll talk about that, of course, after we talk about the disclaimer, which says that everything we are going to talk about tonight is general in nature, has not taken into account personal financial circumstances, objectives or needs. So before acting upon this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the information in that disclaimer is important. You should read it, understand it, embrace it, be one with it, and understand completely, totally, utterly that when you trade, you trade or invest, you could lose money, and that is inevitable, and it is you who makes the decisions about your money, not me. The agenda for this evening is to check out everything that, as I said, has happened in the markets over the last week and try and make some sense of what is about to happen. You can ask me anything from the world of crypto, currencies, commodities, stocks, bonds, and anything else I've forgotten, or it could be anything about the 3 M's of trading: methodology, money management, and mindset. Let us head over to the AUB Broker screen, where we'll kick off with our portfolio analysis of the not there, that's Twitter. I just posted my lithium chart, and I don't know if you noticed what we'll talk about. The people who are listening, who follow those lithium charts, know that spodumene 6% Platts global there, down 3% today, which is frightening. That's where I was headed, and we're going to talk about, and we will look at the lithium chart a little bit later on, but we're going to talk first up about the Nasdaq chart, which is kind of irrelevant at this point. Not irrelevant because of the wonderful trends, double greens, incredible price action, and just this wall of demand in terms of candles over those last 5 candles. What a week it was on the Nasdaq. That gap up on the Monday, and then another little gap on a Tuesday. I'm sure quite rare. I'd have to do the research, but you know, two gaps, 2 days. 2 solid demand side candles. That is another very strong demand side candle. That is the weakest candle of that week, and that's saying a lot. And then Friday is just the perfection personified as far as excess demand goes. And yet tonight, actually, we will head back here because I want to show you this on the Market Watch futures, which is where I just get the ready reckoning of the futures. It's the quickest and fastest way, I think. It's just to go to the homepage of Market Watch and click futures, and you can see what how they're tracking. So down about 1.5% on the Nasdaq composite, 1% on the S&P 500, and that's because somewhere probably, yes, here we go. We're going to hear about the Moody's downgrade, and perhaps even if we head over to here, Market Index, you can read about it there in my evening wrap. And Moody's downgraded the US's credit rating from AA. I want to get this right. From AAA to AA1, and now there's a 21-notch system that Moody's has, and capital A, lowercase a is the top. That's the best. The US was at the best, the most creditworthy you could get, and it was that rating negative for a period of time. The negative indicating that if Moody's was to change, they would be downgrading. They have now, and we've gone to capital A, lowercase a, 1, at a stable rating. So we're at this second notch of the 21-notch system, but we're back to stable. So Moody's is saying, look, we've downgraded, but it's unlikely we're going to make a move up or down anytime soon, citing there, of course, the increase in over more than a decade in government debt and interest payment ratios to levels that are significantly higher than similarly rated sovereigns. And I think the last time there was a downward move was in 2011. So look, it's a bit of a big deal. That's the best way to discuss it, or explain it, or describe it is the word I'm looking for. It will change things very much at the margins. There may be some hedge funds out there, some money managers that simply aren't allowed to invest in risk-frees of sovereigns that aren't the highest rating. Okay, but generally, I mean, they would be the most risk-averse funds out there. Your typical low-risk fund is going to go down, 2 or 3 notches in that spectrum. So it's not going to make a huge difference. The White House spokesman said, "Who cares about Moody's anyway?" Of course they would. And we should head over to we'll get back to the charts. I was going to show the bonds, but no, I want to work my way through this, which is our portfolio management model and our current setting of 2/3. We said last week we're going to move from 50% invested, 50% cash to 2/3 invested, 1/3 cash. And I see no reason at all based upon this chart not to do that. In fact, if anything, last week's price action vindicated that call. Order of magnitude 1.5% down today in an environment where, look, it's not an ideal scenario in terms of what's occurred, and we'll see some other things that are far from ideal, but I don't think a species-ending event. That's where I'm trying to get to. Let us have a look at the, I should mention in terms of where any pullback might terminate. Look, there is a wall of demand through here. So if anything, it'll terminate somewhere in here. Above that gap. I mean, that gap just was caused by this huge influx of demand and supply all at the same time, just not wanting to sell. So this is an important area for the market. We don't want to see it push back in there because it would mean that the demand that has been powering this rally is probably consumed, fulfilled, and that would be concerning. So I don't think we'll get there. Watching candles, of course. Let us head over to the Aussie market now. Where actually a far more sinister decline today, probably not surprising anybody out there, because when the Aussie market's lousy, it's really lousy. And we didn't really, and look, hey, we've been very strong. I shouldn't be too harsh here. We're very strong, but we didn't really get that last big push in the Nasdaq, and we've actually fallen today, and they haven't even gone down. You know, we're getting the dip without them dipping. That upward shadow is a telltale signal that there was supply lurking in the system, into those early highs on Friday. Sell the rally stuff. It's not what we want to see. Look a little bit there, but I don't think it's anything too major just yet. That's obviously not a great candle, but we did see a similar sort of pattern here, and it was fine. Again, I think a pretty mild pullback if we're going to get one with the short and long-term trend ribbons. They're not too far behind, I think, to offer some dynamic demand. This was, as I said in my update tonight, a very logical place that we might see a little bit of supply manifest itself, and that's the order of magnitude of what I think there will be here. I think the big game, the ultimate prize is of course 86.16, and we'll see substantially more supply there if we're lucky enough to get there. What was I going to say about my idea here, which was 2/3 we agreed to move there, and I can't see any reason not to be there at this stage. But we are always watching very carefully, aren't we? Let us see if there's anything to push us off this idea of 2/3 risk position. And we're going to head to Russell 2000. And I mean, geez, that was pretty special on Friday as well. You could see their Monday gap, or its Monday gap, was substantial also. And if that was a turnaround play, we'd probably be looking very closely at it, some sort of interacting with that long-term downtrend ribbon. So certainly nothing there to tell me that we need to be concerned. And that, again, remember, is the heart of corporate America. Let's head over to Europe now, and looking fine there in France. I don't have current prints. I can check those, but again, you know, if we do check them, all we're really looking at is going to be, you know, a live candle anyway. So what, right? It'll really just matter what happens in America tonight. But we can see losses there ranging anywhere from about 0.2% on the DAX up to about 1.9% in Italy there. That is the FTSE MIB. But otherwise, I would say order of magnitude quite mild, and in keeping with what I told you before, as in not ideal what's going on with Moody's, but not a species-ending event. And there's the DAX otherwise, and if we put that 0.2% decline presently in this session into the context of that crazy, wonderful rally, where there really isn't anything to worry about, nor there. FTSE actually looking very, very good, better than us now, I would say, I think. And Spain, what are we doing, ladies and gentlemen? Why are we here? Why are we not in Spain right now? Looking at the Hang Seng, not bad, no complaints. The Nikkei, no complaints. We're looking for red flags. And in fact, that actually looks very, very good there, doesn't it? The Nifty 50 in India, and the Shanghai Composite looks fine. It doesn't look great, but no complaints. And actually, that looks starting to look half decent there on the Nifty 50. So this big trade war that is supposed to destroy the global economy, apparently it won't. That's at least what stock markets are telling us from all over the world. Let us head now, actually while we're here, let's check out some of these commodities, and we'll make that a line chart so we can actually see what's going on. Obviously we want to see these improving to tell us that the global growth outlook is improving. Yes, and some improvement there on aluminium. That's good to see. A modest improvement there on copper. That's also good to see. Nickel, neither here nor there. Not too concerned about that. Some improvement there on lead, some improvement on tin, and some improvement on zinc. So actually those are fitting in with our broader picture of recovery as well. And the chart that of course is absolutely horrific is the lithium chart. I did tweet on this day, the elevated volume. Let me zoom in there. So nice little lower shadow, elevated volume. I said, look, after a decent fall, probably, and it was the volume that got me there. I thought, maybe that's a low for a little bit. Of course, we got that candle next day. Then that candle, I didn't want to say anything on that day. I was a bit gun shy. And then I got this day, and that's the biggest volume out of everything. So solid rally, demand's coming in, clearing out some supply, and that's it. I've tweeted again. Look, maybe there's a low there for a while, and then boom, boom, boom. So I won't be trying to predict the low on that. And when I say low, I mean low for a little while. As in, we'll get a little bounce and then up to the trend ribbons and down again, but we're not even going that way. Let us head over to the trading view screen in a second when I can find it, and over there it is, and we'll move up the list here with silver starting off, and there's nothing to see there, so I can move on very, very quickly. A little bit more to see on gold in terms of, we talked last week of this double topping pattern of it challenging, I think it was at the time, probably on this candle here, I suggest, the long-term trend ribbon. It wasn't an uptrend ribbon, it had transitioned to amber. It has stayed that way. We've actually had 3 closes last week underneath that short-term trend ribbon, so that's not ideal, but there is still some demand lurking in the system. That little shadow there, in particular that candle, and then that little shadow there, and we're seeing a little pop-up today as well, and the Moody's news has certainly helped. I don't think a lot has changed, and I think it is losing the battle in the short term, if only to come back and test that long-term trend ribbon at some time. And Aussie gold stocks have been all over the place as well. Copper not going anywhere anytime soon. We saw a little bit of a pop-up in iron ore during the week. It's pulling back again to the long-term uptrend ribbon. And look, as I said in my update last week, it's trading ranges within trading ranges within trading ranges, but at least it's not going in the toilet. And that's important, I think, for Australia and some of those iron ore stocks. Even saw Rio come up in my longs scan for the first time in a few months during the week. Uranium continues to push into that long-term trend ribbon, now neutral, because it has switched to amber. We do have a short-term uptrend in the light green ribbon there, and then the rising peaks and rising troughs. So that's starting to look better. It's not a long-term uptrend, or it's not a new bull market, certainly. It will be when we make a trough above that long-term trend ribbon. And I have a detailed article with detailed technical and fundamental analysis coming out for you tomorrow on Market Index, so stay tuned on that one. Heading over to, just do the energies here. We've got Brent crude going nowhere very fast, and the same can be said for thermal coal there and metallurgical coal as well, reflecting the improvement in the iron ore price. Let us head over to actually before we go, we can have a look at Bitcoin, which we did say, I think this candle here, we said if you've never had it, maybe you might want to buy some. It's probably going all right. Do you need to do anything about this live candle? I don't think so. And Bitcoin is not this sort of alternative asset or an asset that has non-correlated returns with equities. They're highly correlated. They go in the same direction. So if equities are down today, then there's every chance that Bitcoin is going to be. But we are seeing a bit of extra supply coming in around those previous highs, and so that's not surprising here. As long as that candle doesn't get too much bigger, I don't think it's anything really bad to worry about, but we would wait for confirmation one way or the other. So I think Bitcoin's fine, is the summary there. Dollar index, just out of my curiosity, starting to turn down again. That is probably to do with the Moody's news. In fact, I'm quite sure it is to do with the Moody's news. I just want to check this one very quickly. Hovering there or thereabouts. Let us head over to the bonds, where we will see why that US dollar is coming under pressure again, because this thing is heading up, which means that investors, both domestic to the US and internationally, are selling US 30-year Treasury bonds. And there will be, because this is the least risky, well, I guess the perceived longest term, lowest risk sort of basket here. There's every chance that in 30 years, well, I guess if you look at it the other way, like who knows where America's going to be in 30 years, but the theory is that you'll get your money back, and we are seeing selling here of bonds pushing those yields up, and that is again being borne out in the currency. But what is interesting about this, and this is the rate that US mortgages tend to be pegged upon. If we head out to the weekly chart, what would you do with this chart if it was a stock? What we'd be calling it a continuation setup. We'd be saying, yep, plus 1/3 risk. We'd be buying it. I mean, the expectation here is that it's going up. So what does that mean for the US economy if mortgage rates are being forced higher, regardless of what the Fed is doing? Or then does it push the Fed? Does it force the Fed to act? White House be damned. Or to inject liquidity some other way. The Fed will be watching this. Jerome Powell is watching this chart as closely as we're watching this chart, and he will be quite uncomfortable about the situation there, because with the uncertainty that's out there, he doesn't want to see something like this derail the US economy. And this is the monthly chart here, and that could be a huge breakout. I mean, could it be 7%? Could we be talking about 7% on the 30-year? A frightening prospect. The 10s have also risen, but not as much. As you go down the scale, that's the weekly chart. In fact, that looks good too. That's frightening as well. Frightening myself. And as you head down, the increases are a bit smaller, because this is where the Fed is having more impact. So, yeah, very interesting what's happening there. What's also interesting is that the European yields are also rising. So it's not like money's going into these risk-frees either. So in theory, does that mean that there's money that wants to find some stocks? I don't know. I need to think about that for a little bit. Let us head over to your requests, and let's see what you want to talk about tonight. Interesting times, no doubt. Let's go to Avant has got MAU and AYA. So let's check out those. Oh, look, a decent turnout, but not a lot of requests, and no offline requests today. So I'm not sure what's going on there, but could be a quick one, which is fine by me. Let's head over to MAU, which is not that one. MAU, which is that one. That looks really good. Let me get rid of some of these. Oh, thank you. Thank you. Whoever that was, appreciate that. Let's have a look at this without the lines. I like this. Let's go here. You see the importance there of zooming out. Not to necessarily to check the trends. I don't check the trends. I'm just looking here, but I'm not looking here so much, because the risk is if you head to the weekly chart and you see something here that's now I'm not so sure. It'll confuse you. Just make your decisions here, and all we're doing by doing this is just checking where those big points of supply are. And look, they're pretty old as well. I mean, one there from COVID, just after COVID, and one from sort of mid-2021. So will there be a group of people who got in here and got in here that have held on the whole time, that are now staring down the barrel of break even? Don't forget, there were a lot of people who bought stocks, mining stocks around that time, that are heading towards zero right now. A lot of lithium stocks never came back. So for them, that whole portfolio that might have a few of these, they're probably looking at this as just this greatest prospect here of finally getting their money back. And all that means is, potentially, in that zone. And we're seeing it manifesting today, aren't we? So I mean, you saw it manifest here. It was an issue there, and it's an issue today. But otherwise, it is a very, very strong setup. We've got two green trend ribbons there. Nice basing pattern through here. I know it's flattened out a little bit, but that flattening out is because of this. That's the latent supply that was created by this top. We all know the feeling of that, just feeling like a sucker again. And then this idea that we can pretty much get close back to break even. Because for us, we'd look at this and we go, well, why would I sell? Yes, I'm getting close to break even, but I'm not going to sell because I've got great trends. But people don't look at the chart like us and go, oh, it's got great trends, I should hold on. They're just thinking, oh, it's gone back up. You know, they don't associate the going back up with something good happening. Bottom line is, I think all we're waiting for here is really the next high close, isn't it? We've got a shadow, and we've got a test. This is testing the big one, and then today's shadow has tested this one, and I don't think we're far away. So if we literally get something that closes anywhere towards those highs, they don't have to close above. We don't have to have a breakout. That's not how my model works. I don't like to wait for breakouts because I feel you give up too much. Everybody's looking for the breakout, looking to enter on the breakout, right? So we want to be in before that. So let's say something like this appears on your screen, and then we would be looking for plus 1/3. So contingent on that, let's go +1/3 next high close. If you already have it, of course it's FRP. And yeah, I think it looks like a very, very, very good setup. So definitely keep an eye on that one and follow it up with me in the coming weeks. Let's go to AYA, which is more of a, well, it's not really a turnaround setup, is it? Because it's stayed long-term uptrend. We never closed beneath the long-term trend ribbon. And once again, the long-term trend ribbon doing what it's supposed to do. And it's more of one of those hybrid setups, the continuation turnarounds. But I think this is looking good, actually. I would have liked a little bit more volume to tell me there's a bit more interest, because there's so many of these little ones to look at. I might just get rid of some of these symbols so we can look at it nice and clean. I think that's less distracting. The only thing I'm worried about is this supply zone here. I mean, these are two pretty serious candles. At a point, I think, where on this day there was probably some news. Look at the volume on this day here. Like massive volume, relatively speaking. 2 million shares isn't massive for an 80-cent stock, but relatively speaking, massive volume. So the people that are interested in the stock, there was quite a lot of turnover of them on the day. And a lot of people got caught long, right? A lot of people, because there's a lot of volume, and caught long because look at the candles. So that, I think, will cause this area to be quite a stubborn zone of supply. And this is a guess. I can't know until we get there. And we will know when we get there, because we'll see the candles and how they trade in that area, or how they trade around here, because that supply is really itching to get out. And it can't wait until you get all the way up to 85. And there's $1 there as well. Not that I'm worried about $1. It is not. We've tested it. The markets, that's the whole reason. Look, it's the whole reason why it stopped in the first place. Did you notice that? This is why we take profits at $1, ladies and gentlemen, without asking any questions. Even on a day that looks that good, we still take profits on $1. So we just have to wait and see. I don't mind it. If you wanted to go, I can't complain, because everything else matches up. Look, this is about to turn. Ideally, we have a little bit of a short-term uptrend there, and just waiting a little bit, being patient. It's not there, but I'm okay, because I like this candle. I like this very shallow pullback, and I like this candle. Okay, so I'm happy to forego that short-term uptrend, which is literally a candle or two away, for this pattern here. I'd like more volume. So based on everything I've said, and we've got a long-term uptrend, the price action is looking quite good now. We're back to rising peaks and rising troughs. Okay, so we've got a lot of stuff there, but we're also missing a lot of stuff. So Avart, I need you to score it out of 10. What is it out of 10? So score it now. I mean, you've heard my all the stuff I'm thinking about. You might have some stuff you're thinking about, but what is it? Is it 6 out of 10? Is it 7 out of 10? What is it? What do you think? Is it 9 out of 10 based upon the stuff I've said and the stuff you've considered? And that's Sivan said 7, and I'm with you. I think it's about a 7. Jackie's gone 6. Yeah, I mean, look, this is what we should be doing. You should all have a number in your mind, and feel free to type it in. Perry's gone 7. Jackie's gone 6. And I think it's somewhere there. And it is going to be subjective. Remember, this is not a black box system. This is it's a black box system. This is not an explicit rules-based system. This is a subjective system, a common sense system. And some people will automatically not like those types of trades. They want to see it more around here. And they will only take those trades. And let's say if you only took those types of trades, you probably do very well. I don't think you should ignore these trades, but yeah, we need to put them in context. So I totally agree with you, 7 out of 10, and that's okay. Look, even if you don't take the trade today, make note of it. You should have a record of even trades you don't take to say, oh, look, I thought this was 7 out of 10, and look, this is how it turned out. 2 weeks later, a month later, I was right, or maybe I wasn't right, and I'm missing a lot of trades by maybe being too harsh. So we always, it's very easy for us to track the trades we do take, but I think when you're learning, it makes a lot of sense to track the trades you don't take as well, because there's probably some information you can get from there also. Okay, 7 out of 10, which means for me, look, there's a setup there. I know I've fudged a little bit with that short-term uptrend, but no, I don't mind it. But is this going to be the one that I put my money on today? I don't think so. If it had a nice volume day today, I could have a go. But without that, I'm a little bit concerned about the supply zone. Okay, let's keep moving. And we're going to go to Adonis, who's saying, hope you're well, Carlo. I'm well. Thank you, Adonis. Hope you're well too. Thoughts on the following USA stocks? Okay, we'll do those at the end. Perry's got AUB, which I think looks very good, was in my shortlist tonight. And if I'm not mistaken, it's also in my shortlist. So we might as well do those now, as we tend to do when the first one is mentioned in session. So yeah, look, I can't fault that. Probably worth checking out the weekly. I must admit I didn't do that today, but there's nothing to worry about there. That's blue sky. So happy days. So yes, for me, Perry, noted and featured. Also, AMA, and we're just having a look at the weekly chart there. It's just where we have it to be, but heading back to the daily chart. So we might have said 1/3, maybe a week or 2 weeks ago, but this has been in for a little while now. From about 6 cents, I think. So 6 cents to come up to 9 cents now, not too bad. REA, I did think about this one for a while. This was actually went through the list and added SRG, URW, WGN, and then I came back and added this. Simply because, look, I like this base pattern here. I think the candles through here are pretty well. Today's candle didn't knock my socks off, but it was a pretty lousy day on the market, wasn't it? So I got extra marks for that. I know there wasn't a huge volume here, but what I felt this setup added to the other list was a little bit of variety. Okay, well, hey, that's still very much turnaround setup. That's more continuation. That's more of that sort of hybrid, isn't it? Continuation, turnaround. That one's more advanced. It's more continuation now. URW, I'm looking at that now, I'm wondering why I put that in. I mean, it's don't get me wrong, it definitely deserves to be in the broader list, but does it deserve to be a feature? Just a lot of white candles, I think, is why I didn't think too much about it when I put it in. And it's coming up to that, which is not a problem because this is a high close. And this is, I think, one of the best closes we've had for this. Really, in fact, it is the best close we've had since then. So I would say, for all intents and purposes, this is our breakout. This is not a breakout as far as the rest of the world is concerned, because it hasn't closed above that high. But for us, this is what we view as our trigger to buy. So no, I'm going to stand by that. I'm looking for a variety of setups, and that's very clear cut. So REI I thought just was a little bit something different there. Obviously, I've talked about the rest. So yes, for me on AUB, Perry, let's do your next one, which is LDR. Not LRD. It's a big difference. Yeah, look, it's a little bit, isn't it? A little bit zigzag there, but certainly seems to be getting its you-know-what together at the end. Today's volume tells me there's lots of interest. We've removed lots of supply because the only way you get volume is, yes, there's lots of buying, but there's lots of selling. So that selling is now in cash. They were sitting on Lode Resources for God knows how long. They got tagged here, got tagged here, they got tagged here. And they finally got their money back because it was that big day. Somebody gave them a call. Oh, shit, you hear, Lode Resources going, oh, shit, finally I can get out. Boom, I'm out. Ha, how clever am I? Got out at 13 and a half, got out at 14, and now it's 14 and a half. I'm going, oh, no, what have I done? I've held this piece of crap for 2 years. 2 years I suffered through this thing. And it went up for 5 minutes. I got out, 14 and a half, 15. 15 half with size. They're looking at the market breadth. There's millions on the bids. Oh, 16. Oh my God, I've done it again. Sure, I got to get back in. The good news is they've got cash to buy it now, don't they? So that's why that's important. That's why the psychology of that volume and that candle is important. Particularly when you can see, can you see? You can't see, can you? Because I'm just waving into cyberspace here. But particularly when you can see, if I use the mouse, that we have actually taken out some really important levels there. I want to go to the weekly chart. The weekly chart's going to be, I think, really fascinating on this one. And yes, there's a bit of a level here, and you will notice that I kind of draw the width of these boxes a little bit randomly. And that's okay. You can draw them randomly as well. There's no real right or wrong answers. Sometimes we get like another little peak that we can peg it to. Otherwise, just make it a zone, right? Because it's all, ladies and gentlemen, it's all bullshit anyway, right? We think there's going to be supply there. We won't know there's going to be supply until we see the candles there. And people don't go, oh, it's 24. They get the call from their broker when it's 22, right? Or they decide to do it because they're watching like, oh, it's 22, it's close enough. So look, we go there or thereabouts. It's not going to matter. I think people can be just too pedantic about these things, because at the end of the day, you're going to make a call. You're going to get it right. You're going to get it wrong. You've got your risk management. You've got your analysis to support you. Don't beat yourself up so much about the pinpointing these entries. Just get excess demand or excess supply on your side. So that is miles away. It's not a problem. I can't fault this otherwise. Everything else checks out. I know it's a bit sketchy, yes, because we've got candles that are a bit, that high, open, high and low close was the same, volume on that day, 300,000 on a 13-cent stock. Okay, but we're going into this eyes wide open. We know the risks that are involved in trading these less liquid stocks, small stocks. We're not putting the house on it. It's all good, okay? Plus, I'm not sure in partners, everybody, so a plus 1/3. FRP, yeah, not next high close, ready to go. Okay, let's go to escape. The next one, which is going to be, what's it going to be? I missed one, WWI. Let's go back to Perry, WWI. Okay, a little bit sketch, but it's okay. It's getting less sketch. It's starting to get its, together, as we said. A bit of a volume push today, and by a bit, what are we trading now? We're trading sort of in the 8 millions. So very different dynamic to the other one, obviously slightly different price, but I would say a bit of a chat room favourite. Let's head over to the weekly chart, and nothing too sinister there. This is all fairly liquid on the way down, so it'll be fairly fluid on the way down, I should say. So fairly fluid on the way back up. If we draw our random, and you see that one, I've got a bit more of a guide to go with the top of that shadow. So that one, I think we can get a more sensible width on it. Back to here, it's miles away. Look at that. If we get to, if we have a problem at 4.8 cents, we'd be very happy from here. That's double. So no complaints at all on this one. The reason why things are a bit sketchy for me today is I don't have my normal keyboard. I've got this spare one, which is the kids' iPad keyboard. I left mine at the office today, so that's why I'm having troubles making it all work. So I'm going to go plus 1/3, plus 1/3, FRP if you've got it. Happy days. Let's go. Thank you for those three, Perry. 3 plus 1/3 there. Robert has also picked LDR, and he's probably a bit annoyed with Perry because he probably thought, Carl's going to love this one, and then Perry beats him to it. Let's go. Hey, Robert had REA, so that's good too, because that's the kind of that quirky little pick that I had. So hopefully it goes well for us both, Robert. But yeah, I think that deserves a go. What do we say? Plus 1/3 last time, and I don't think we need a high close this time, but we'll copy it over, and we'll just go FRP on that one. Okay, and Going next to Roscoe gas chart. Natural gas, okay. I'll do it now, because if I don't do it now, I'll completely forget about it. So let us head back to here and to here. And there's two. There's TTF exclamation mark, which is your European natural gas, or the Dutch one, that is traded in Rotterdam. And then you've got the US-based one, which trades on NYMEX in America. You can see, I'm still pointing, you can see up here, NYMEX. Nothing doing there, really, is there? It's all looking a bit ho-hum. Was looking good literally until Trump took over, and then it's come undone like many things. So I don't think there's much to do there on either contract. Roscoe, if there's something specific you're interested in, let me know. Let's go back to here otherwise and move down the list. We're going to go to a different Robert, who's got Fortescue for a short. CIA came up on my list today, which is not that one, but that one. And yeah, just a big candle. Maybe volume could have been better, but there's nobody in the way of it. That's what that means today. And just in trend, so I was happy with that. Let's have a look at your Fortescue. Oh, I've got a few things going on there. A lot of price action discussion, so let's get rid of that. And I would, again, glad I brought up CIA, because I think CIA is probably the pick of the two. Not that you couldn't short this one if you really, really wanted to, but again, if we were to give it a score out of 10, there's a few things working against this for a short, okay? So we want to see strong signs of excess supply. We want to see supply side control, yes. There's actually a little one in there. And I reckon there's a little one in there, and then we're coming down, and then we just blow. We just, that's a, three peaks here, right? And like head and shoulders, and then it's just boom, straight through that. So yes, today certainly is an impressive candle to be thinking about shorts, but the price action I think is still showing demand side control. The short-term uptrend ribbon tells you that it's a little bit too risky at this stage, but it certainly has this going in its favour. So if we were to give it a score out of 10 for shorts, it might be very similar to that other one. We're giving it sort of a 6 or a 7. What elevates this then? Where will it become higher quality? So it might not be tomorrow, but any sort of lower peak. Just give me a lower peak. Tell me that this building demand here is turning into building supply. A shallow rally into this big dominant candle here. So small body, upward pointing shadow, and then another nice little black candle. Doesn't have to be huge, but just again, saying a dink. Okay, we've started to move down. Just give me any dink back up. And what that dink is going to do is tell me what the demand side's response is, right? So we're testing this. We're testing the demand side. The supply side has taken a shot at the demand side, and we want to know how the demand side's responding, right? So demand side response is what we're after here. It's not that I can't type; it's that the keys aren't in the right place. Demand side response, and just a little bit of a dink there would be nice. But have a look at CIA, which is that one there. And I wish there was a bit more of a dink here, but there is at least there's a little bit of a coming down. I like that, okay? And we've also taken out something that Fortescue doesn't have, is we've taken out this trough here as well. So you can see this lower shadow, demand side response, and then coming down again. Okay, so it's just any sort of demand side response. And I'm not saying CIA is perfect at all. I'm not saying that. It's high, 8 out of 10. Nice other little lower peak there would improve it. But if you're looking for short exposure, a little bit nervous about what's going in the market, you just want a bit of balance, these are the prospects that we're looking at. I'll show you some of the other ones today. So CIA was on the list. Coronado, I'm not sure how much is in this, but it just keeps going down every day. So maybe there is. CTT, just selling rallies into that short-term downtrend ribbon. CUU, you can see the lower peaks actually there quite clearly. Pretty sure that that one's lower than that one. Little gap and run, close on the low. Domino's, it's just a serial underperformer. Aluka, again, pretty sure that one's beneath that one at least. Pilbara Minerals, I must admit that one doesn't have the lower thing, so you probably could argue that deserves a dink. But I would put to you that compared to Fortescue, which is literally Fortescue's up here somewhere, right? This is much flatter. SKC is an obvious one. WBT clearly has the lower dink coming back in, and then WC8 as well, although I'm not sure how much is left in that one either, but it certainly meets the criteria. Okay, so we've looked at longs, we've looked at shorts. Hayden has got something very interesting there. In fact, I better finish off on Robert's other two, FRS, which is not that one. I know you're seeing some odd things come up today, and you can see here, I've got FRS 2011, 10. So that's the FRS that was Ferroz, and it finished trading in October 2011. And some of you may remember it. And you go, what's going on with Carl's data feed today? It looks very different. And that's because I renewed my Norgate data package, and I was on the mid-tier one, and because Market Index is paying for it, this time I went to the higher tier one because they're paying for it. And now I get all the historical stocks, the stocks that don't trade anymore, and that's obviously one of them. So sometimes when I type in FRS, I get the old FRS, for example. So if you're wondering what's going on, and if you're wondering what the benefit of that is, why would you ever, hey Carl, why would you ever care about Ferros back in 2010? It becomes really important in your back testing. So when you're back testing a trading system, and you'll obviously test it on a group of stocks. I tend to use the All Ordinaries Index, which is the top 500 stocks. But there's no point backtesting. I mean, there's literally no point. Your backtesting is completely useless. So if you're doing backtesting in TradingView or MetaTrader or in other places, not that you're probably doing it with stocks, maybe in TradingView you can, but you're only looking at the existing 500 stocks of the S&P 500 or the existing 200 stocks in the ASX 200, that backtest is worthless because you had a completely different set of constituents through history. If you're doing a 10-year backtest or a 20-year backtest, you have to test over stocks that were there at the time, because there's this thing called survivorship bias, where stocks that don't go very good get taken out of the index, and stocks that are doing really well get put in. So of course the index goes up over time. Of course it does. If you keep taking out all your bad stocks and you keep putting in the new up-and-coming ones, your index is going to do very, very well over time. But that doesn't mean your trading system works. If you're testing on that index, that's going up over time. So you've got to be using that sort of data there. I'm not sure if that's relevant to anybody out there. Some people are scratching their heads. But yeah, it's really something to think about, and it is a feature of Norgate data if you want to do that type of work. Let's head over to the real FRS, the current FRS, which is Forrestania Resources, and that looks amazing. I can't complain about this one at all. I think it looks very, very good. Weekly chart checks out. I think it does. We're over there. We're up above there. And there's really nothing until that big peak above 15, and we'd be very happy if we went from 7.5 to 15. And we've actually closed above this high here. So it is looking spectacular. Ideally we got in here or here, which are also sort of signals as well, but we can't go back in time. I suspect it wasn't meeting my turnover filter. It's not. And that's why you haven't heard about it from me. But I'm glad you are finding these things. I really, really am. It's really does give me a warm, fuzzy feeling inside to know that you're able to find these, because I think they're great, and hopefully you're on it, and you're asking me about something that you're already on, plus 1/3. And if you're not, I still think it is at risk FRP if you've got it. Let's go to the next one, which is EGR, Ecograf. Yeah, I like this one, and this is a big point of supply. This is going to be a really, really chunky, is a technical term, POS up here. I think a lot of people got stuck in that one up there. It was looking so good on that day, and then we got that really species-ending event for all intents and purposes, isn't it? It's going to be very hard to come back from that. You get that, you get that candle, and you know it's going to be hard to come back from that. But three very solid days in a row. That one's above average. Even today's above average. There's some interest there on this one. Yeah, I like this. I'm going to go plus 1/3 happily on this one. And I think what's really neat about this is if we go back to Avant. Did I ask you for the score out of 10 before? Might have. Let me go check. Was it AYA? Yes, AYA. So Avant, out of curiosity, my curiosity, what do you reckon about that one? EGF. It was EGF, wasn't it? EGR. No. Oh, I've lost it. It's not EGR. EGR. Somebody else said it. There you go. So I think this is a higher score. Don't you agree? I think this is sort of an 8 out of 10. Can you go higher than 8 out of 10 for this one because of this chunky point of supply? Like if that wasn't so chunky, this would be like a 9 out of 10. I mean, if that only sort of went to here instead, like it's almost 10 out of 10. So that is just bringing it down a little bit. And then we get to the end of the day and we've made these assessments, right? As you go, score it out of 10. And you're going to be able to say, well, here are my best 3 trades today. Okay, let's keep moving. 8s, yep, good. Put in a score. I'm sure you can all see each other's posts. In fact, I know you can because you were talking to each other last few weeks, and see what other people are thinking. You know, let's get some interaction going. Let's go to Hayden, who has ANZ for short. And yeah, this was on my list today, and I thought about making it a feature. And it was nearly a feature. I just pulled back at the last. So it's in the broader list, but didn't make feature. And I was just thinking, look, if I take out that bit, it's kind of a bit sideways. And that was it. That was all it was. So yes, it's do not pass go, do not collect $200 straight out, minus 1/3. There's no question. If you're already short, full risk position. It's just whether this one got elevated up to that feature status. It was very, as I said, very, very close. So if you wanted to have a crack at it, I just think maybe, is this a downtrend or is this a sideways trend? And that's all. That's all I had to consider. But I think, again, in terms of variety of setups, you will find sometimes that the stocks, like you might be short this stuff. Let's say you short these 3 stocks. You've been short them for weeks. They've been tumbling. And you think, okay, I've got some shorts in the system and they're protecting my longs. And then the market gets belted and those shorts don't do anything because they've kind of already been skinned alive, right, by the traders, by the funds. So you actually don't have as much protection as you thought. So sometimes you just need that variety, and you'll find that it's the ones that have been hanging on that bad day, they're the ones that got hit hard because there was still that indecision and still that coiled spring or that potential there to get hit. So that's why I think this is interesting from a variety of setups perspective. Let's go to some of you, I'm sure, have experienced that. Like you think, oh man, these shorts should have protected me, or they didn't. But sometimes they've actually kind of had a little bit of a run already, and there's another batch they're getting ready to go. IEU is we talked about Europe. We said Europe's looking good. We talked about Spain, how well that's looking, and some of that would be reflected here. A lot of black candles. That's less about, well, there's a big fund manager targeting this one, selling into the rallies each day. That's absolutely not the case. It's almost impossible. This is a market-made instrument, right? So there's a market maker that is your bid side and your sell side. And I just think on the open, there may be a particular fund or passive fund that buys, spikes the top, and then the fund manager, I don't know, sells it down. It's weird, but I just think it's the nature of this beast. So if you're going, oh, there's too many black candles, car, I'm not interested. I just think it's the nature of the beast. So we're dealing with something a bit different here. As far as the point of supply, that is less relevant because you're talking about an ETF. So we're talking to David here. So I wouldn't be worried about this point of supply because it's an ETF. points of supply are largely irrelevant. Okay, we need to go to the source. Okay, and the source for this one is whatever the source is. I don't know. I'm guessing maybe it's the iStocks 50. You might know better than me. Okay, so if we go to the iStocks 50, that's what we need to be assessing the current price against any historical points of supply. Okay, and we're sort of seeing a little bit of a correlation there, David. And some will be different because there might be some, if there's derivative instruments involved, there might be some time erosion. I don't know. Okay, maybe that's explaining why that one's a bit closer to the high. Maybe it's not the iStocks 50. Maybe it's just something very similar. Okay, but again, don't worry about points of supply on ETFs like that. Worry about what's happening here. You're saying, I'm worried about buying into this because of that big point of supply. Yeah, I get it too. But also, I think this trend is strong enough to have a crack at that, if you are so inclined. Am I so inclined? I don't know. I don't know if I'm sort of, IEU, or IEL. I keep typing that in for some reason. That was on the list of shorts today as well. IEU. There you go, force of habit. If you could get a Spain ETF, I think that's the one you want to trade. But the broader Europe one, maybe not as ideal. Okay, let's keep moving, heading down the list here. Mineral Resources seem to be heading to for a turnaround play. And that's Mineral Resources. That's Mineral Resources. Look, I don't think it was heading towards a turnaround play. It was certainly heading towards the long-term downtrend ribbon, but so much had to happen before it got to a turnaround play. But, look, it's possible. Let us also just remind ourselves of that event there. And you can see big rallies and then just down she goes. I don't know where this is going to be in 6 months' time. That's impossible. I can't tell the future. What I can say is it's not a long yet, because we know that is too well entrenched. I don't think you want to muck around with that, especially after this. Certainly, the price action has improved, and I'm just going to draw quick ones here, stylising, give or takes. That's what we're talking about now, right? Short-term uptrend in place. So some of the elements are there. Have we had a massive volume blow-off on the lows? We've certainly had elevated volume, and I don't think that's a blow-off yet. So there may still be the blow-off in the making. If we were seeing sort of candles maybe that high, or in particular that high, I'd be more excited. But I think that's a low, but I'm not sure if that's the blow-off low. Long story short. Not a long, not a short. And that's what they are sometimes. Move on. Yes, you should have been okay. Min seemed to be heading towards a turnaround setup, not all criteria, then fell big today. Presume should have waited. So does that imply that you bought it, David? Don't answer that question. Presume should have waited for all turnaround criteria to be met. Of course you should have waited for all turnaround criteria to be met. It's the whole point of the system. Peter, we'll get to your US ones in a second. CAT. Let's have a look at CAT, which is not that one. We're going to get very bored of that soon, aren't we? Let's go Zoom, normal, and going to have to look beyond some of these things. So last time we looked at it, we said plus 1/3 on the next high close, and we didn't get a high close, did we? So certainly here, this is a signal. So the last official signal is here. That's the last day you would have actually made a purchase, and even that day, I'm not so sure. Although if you did, so be it. I wouldn't complain. That day, it's that day I'm talking about. That's certainly not a high close. That's certainly not a high close. That's certainly not a high close. What about over here? That's not bad, but I think we need a little bit more after that and that. And then we're coming down again now in sort of a little bit of a downtrend. All is not lost by any stretch of the imagination, but it's not showing the strong demand side price action we'd ideally like to see. So if we were sort of in around this level, I think we would be very seriously thinking about setting some boundaries on this one. And certainly for me, a close beneath that trough is a no-no. That is a no-go zone. Beneath the short-term uptrend ribbon, I can't see any reason to continue to hold it, because we would also have by definition, have closed beneath that trough as well. Obviously, we've got falling peaks. So it's just, for me, it's now just setting some protection and just watching. Are we buying? No, I don't think we're buying now. I think we've got a few things that need to occur before we can buy, because of the severity of this peak here. So that shadow and that confirmation, lower peak, little bit of an issue, that's all. So I think buying's off the table for a while. What would bring buying back on the table? Not until something like this. I mean, we're a few candles away, and lower shadow, nice lower shadows, nice high close around here. So I can take that, I can drop that over there, okay, for an add risk. This is now more about happy with the risk we've got, okay, and there's every chance it goes back up. We're still, okay, so we're not panicking. We've still got this and we've still got this, okay. So we're happy if it goes back up, but we're also happy with the amount of risk we've got, and we're setting some boundaries on this one if it doesn't go the right way. Thoughts on how to enter for a fresh long. Okay, there you go. We're going to wait. I think we're still waiting for that one. Artrya also picked EGR, which I've rated very, very highly today. Well done. FHE is the second one. We can see a bit of a 1/3 over here on a bit of a turnaround setup. Hasn't done a whole lot since then, but sort of death by 1,000 cuts, isn't it? Not plummeting, but every day's a black candle, but hardly plummeting either. So this is a tough one. What do you reckon? We don't want to give it forever either, right? I mean, another 10 days of black candles, even if it doesn't close beneath 20, is still a pain in the backside. So what do we do? We've got a bit of a shadow today. We're certainly in that zone. How much room do you want to give it? Is it sort of a close at 19 would take you out the next day, for example, or at the end of that day? Certainly, if I saw something that looked like this, I'm going to be more concerned. And maybe if we just define it like that and say, look, that's enough to... And sometimes it helps to draw it in, because if we looked at that chart, I hadn't drawn anything, so forget that, and we just looked to say, oh, that's today's chart, you certainly wouldn't be buying that chart, would you? And if I said to you, well, pretend you bought it at 22 cents, would you want to own it? You'd probably go, actually, well, I certainly can't own all of it if it looks like that. Maybe I can own half. Maybe I can only own a third, but I certainly can't own all of it on a chart that looks like that. And it's not a disaster, right? But it's just, well, how long are you, it's a time issue. It's an opportunity cost issue. Okay, so let's say, look, see a candle like that, and then I think we need to very seriously contemplate managing our risk, if not doing more than contemplating it. Okay, let's go to PCK, I think is the next one here from Uphendra. PCK looks very good. Let's get a normal zoom going. Still looks good. Let's go weekly chart. We can see it's one of those little sort of sketchy ones again. We've definitely got a level over here, and I think we've got a level sort of around here, and we might just zoom in and make those a bit more official. So that is, it's not going to let me do it, 4318. So we can see this has had some sort of corporate action, hasn't it? A consolidation or some sort of stock issue, rights issue. What's that one there? Let's copy that one first, so I don't have to figure it out. Do that, do that, do that, and head back to here, and do that. And okay, so we can see we're actually dealing with, oh, that wasn't that long ago, that first point of supply is there, and the second one is up there. Okay, so that's good news. The good news is we've tested, we've dealt. All of this price action here is dealing with the latent supply created at that level, and we just see time and time again. It's good for you to know I'm not making this stuff up. With that in mind, I can't actually fault this one then. I know it's sketchy, but again, we're going to these eyes wide open. A little bit of volume today, not terrible, and therefore we go plus 1/3. Plus 1/3. No complaints. If you've got an FRP, happy with that one. I don't think I've seen this one because it hasn't come up on my liquidity filter yet, but happy with that one. Let's go. Perry's got some US ones. We'll do those in a second. We're about to head back up, by the way. Hood will come back to that. EGR rating 9 on a weekly trading channel. Also, Perry likes EGR. I liked it too. I hope so. Perry says Jackie, she's in. David saying, "Oops," for buying mineral resources too early. What? Well, it's like you were just looking for an excuse, weren't you, David? You wanted to own it. You didn't buy it at 14. You cursed my name. It got to 20. You still cursed my name. Got to 27. I'm going in. Turnaround set up, be damned. Let's go. It's just about letting it go. We don't have to get the bottom. We don't have to trade min. We've got, if there's an itch you need to scratch, just, I don't know, find an ointment, David. We just want to trade high probability setups. We want the 9s. Hey, if we're going to slum it, David, we go down to an 8 out of 10. Do you get where I'm coming from? Give me a thumbs up or something. Like slumming it for us now is an 8 out of 10. Maybe a 7 out of 10, David, is a slumming it for us. But you just traded a 3 out of 10. So we have to make that transition at some stage. And don't worry, it's going to take a while for us to get this stuff out of our system. And that min-res, look, and I hope it goes up for you, but that might help you get this sort of stuff out of your system a bit quicker. So we just have to commit to only taking setups of a certain quality. Peter saying, I missed his stocks. Okay, no worries. AZY was on the list today. Did I shortlist it? I don't think I did shortlist it, but it was very good. And the reason why I didn't make it a feature was I'm still a bit concerned about this. And I was going to say I need a dink, but I actually did do a little dink there. I mean, hey, it got on the list, and that means it's plus 1/3. And when I say the list, that's on your trading view list. So if you go to your trading view watch list, it's there. FRP. But yes, that was the only thing. Major point of supply, losing, maybe a point out of 10 for that. So bang, the best you can do is 9 out of 10. Because we've got to deal with that, okay? Big marks here for today's candle. Big marks. Could have been better on the volume, could have removed a bit of supply. We know the supply is going to be there. So we're removing supply now is the name of the game. So a bit more volume in today's candle would have been better, telling me, okay, that supply's probably gone. I'm not so sure we've removed the supply. Maybe it's still there. We've still got to deal with it. This trough could have been a little bit higher. Minor there, but hey, it's still. I'm going to go say 7 out of 10. It's losing a little bit for this. It's losing a bit. Price action could be slightly stronger. It's still very good. Made the list. So plus 1/3 for me. And if you have it, FRP as well. BTR. Let's check that one out, and then we're heading up the list on US stocks. BTR. Which is not that one or that one, it's that one. There's been a few BTRs in the past. One in 1995, one in 2014. What does that tell you about the ticker code BTR? It's always some little crappy little mining company. Brightstar Resources this time around. This time it'll be different. It's looking pretty good. Yes, pretty good. Where was the setup? Maybe here. Is this the setup? Is that the buy day? That's the only day I think. Here. This day's pretty good as well. I could have had a crack on that day or that day. We do obviously have this to deal with, and we're dealing with it today. Today's candle is the manifestation of the supply at that point, and no doubt also some supply coming in here as well. Although now looking at that one's been consumed. That one has been consumed, so that's not an issue. And then there's one up here. not an issue now. So I think we're just dealing with that point of supply. So today's candle is not sinister, with that in mind. I wouldn't be adding any more on today's candle. There's no need. Next high close, we could add some more, but not today. Happy to hold what I've got. That's the summary here. So FRP, and we would need, yes, absolutely, NHC plus 1/3, but not until then. There we go. Okay, let's head back up the list. We're going to switch over to the trading view screen, and we're going to do the first US stock, which is Brett, DUOL. Oh, Duolingo. Wow, my wife's favourite app. She's always on this thing, shouting at it in Italian, because we're going to Italy very soon. And yeah, she's a paying subscriber, not one of you freeloaders, I'm sure. So that's good for Duolingo. Let's go to 1 week here, and nothing out there. So all good there. It's just about finding the right candle now. It's pulling back, so everything's in place. Everything's perfect here. I can't fault this. So there's your short-term uptrend. There's your long-term uptrend. Your price action is rising. A different drawing environment here. Got to remember that. Rising peaks, rising troughs. There's a little one there, and one there, and one there. Okay. So great price action. This last trough, miles above that second from last peak. This last trough above this peak here, this major point of supply, which was gapped through, becoming a point of demand. So fantastic setup. All I need to see, this is where I'm heading with this, plus 1/3. So we got next high close, that's right, plus 1/3, without question. If you've got it, FRP. There we go, click save. Move on. Let us go to the next one up the list, which is for Brett. He's looking at Robin Hood. Is it a meme stock? I don't think Robin Hood is the meme stock. Robin Hood took advantage of all the meme stock trading. So, in that sense, it's more legitimate. The meme stock was, of course, GameStop, GME, if I'm not mistaken. And let's have a look at that. Well, there you go. Roaring Kitty. Not roaring anymore, which was kind of inevitable, isn't it? As people moved, the internet moves on, mate. Seriously. Let's go back to Hood, though. A different world, isn't it, from when he started in terms of getting kids' attention. Let's go trends first, as we should always. Green, all good. Price action next, as we should always. A little bit of a consolidation zone in here. I'm not too fussed by that, but certainly we are coming back here with some nice price action. Great extensions on those motive phases and very shallow pullbacks on those stagnation phases. We're testing into this major point of supply. We're seeing a little bit of a pullback there. That is absolutely 100% to be perspected. That is to be expected. So everything checks out. There's nothing here that is suggesting any sort of sinister supply side control. It really is a picture of demand side control for me. Yes, we're consolidating beneath there, but we have to. We need to take a little bit of time to remove that supply, and I think we're doing it well. So this one, much like the last one. Okay, NHC, next high close. Give me a nice candle. Might not be tonight because of the way futures are sort of pointing, but you never know your luck, and it might be the night after. So let's click save on that one. So two really good setups so far. Thank you for people who, for the two persons who gave me those. Let's go to, we've got a lot of stuff in the list tonight. I think I found one, ARMN. Harris Mining, okay. Last time we looked at it, we said FRP, so happy to hold. I think we're still happy to hold. What are these guys mining? How are they doing so well? What are they mining? I'm curious. Must be gold. And holding up, given gold is pulling back, I think is impressive. Look, holding on, just fine. We could go next high close. little bit of a supply zone here. Look, it'd have to be a decent, it wouldn't just be any old high close, right? I want to see, this is the candle. Okay, so this candle here. Look at this candle. Focus on this candle. Have I got your attention? That's the key candle for me. So when we see something like that, we say, oh, next high close, everything else checks out, right? I won't do the trends in the price action. The price action could be cleaner. But with these supply side candles, we just want to see that close push at least halfway above that zone, okay? In fact, we've got it there, so maybe I'm being a bit too pedantic. I mean, that pretty much nullified that. We want to say that the supply that was exhibited in that candle is not in the market anymore, okay? And therefore, without that supply, we're able to, the demand side is able to push back up. So, yeah, just ideally a decent high close. I'm still going to write the same thing, though. It doesn't change what I write, which is plus 1/3 next high close. And FRP if you've got it still. And if you do have it, because I suspect the person asking about this is on it, look, certainly beneath here, we can't be holding on to all of our risk beneath there and just watching for maybe a really bad candle before that closes deep into or at beneath the short-term uptrend ribbon. Might be taking us out of some of that risk, but otherwise I think I'm still fine. VGZ is the next one. VGZ. Yeah, look, yeah, and if Aris was a gold stock and this is a gold stock, we're seeing some of that contraction in that price action as gold itself is faltering, isn't it? So, yeah, I mean, look, first with this, let's find some areas where we want to be careful. Maybe even there for a first minus 1/3. Certainly beneath here, we're most of the way out, I'd say. As far as adding risk to this, again, all the basics are there. So let us, and you can probably tell from a little bit of trepidation in my voice on these, I'm not as confident on these ones as we've seen some of the other ones. And maybe it's just my sort of views on gold that are tainting my views. FRP if you've got it. I think gold's got some problems, short-term problems. That still need to be resolved. Okay, let's head back up. Make sure USA stocks Adonis, I nearly missed you there. And Peter wants gold again. We did do gold earlier on. Perry's thumbsing down something. And we said gold was, I think for me, more likely to head towards the long-term uptrend ribbon than just to suddenly go up and make a new high. But hey, I don't know. But that's my hunch. Adonis, Perry, I'll come back, Perry. I haven't finished my run up the top. I've just gone back to the bottom and then I'll head back up to the top. Let's do DB, which is Deutsche Bank, for Adonis. Otherwise, I would have missed Adonis potentially. So Adonis, same as the other ones. It's just incredible to see some of these banks. You saw CBA today go up. That thing is a monster. I wonder if these banks aren't all in the same basket. There's just a few funds out there that are just hoovering up these banks because, hey, you're holding stocks, you've got equity risk there, and you've got that defensive flavour to it as well. But this is, can't fault this one. Next high close, if you could be bothered waiting for it, otherwise just get in. Plus 1/3. And very strong trends here, FRP, if you've got it. And save that away for you, Adonis. Let's go to ACT. Enact Holdings on the Nasdaq. Yeah, look, I like this one. It's a little bit compressed. It's a little bit crunched. But Friday's candle is very impressive and speaking to me of sort of maybe breaking the shackles of this very well-defined trading range. Let's go to the weekly chart. Let's see where this trading range ends. In fact, it really does end. There's nothing else. So that promotes it up the scale for me. Yeah, I think Friday's the candle, and I think today, this morning, is the open. And again, if it opens down, I wouldn't buy it. So it's not like Oh, it's opened down, I'm getting a discount. Okay. If it opened at, say, 35.80, for example, because I've given it this tick of approval, right? And again, if I'm you, I'm going through all my setups, rating them out of 10, and then looking at what I've got at the end. Okay, I'm considering the strongest setups from my continuation group. You know, maybe a strong setup from my turnaround setup group. Getting a bit of a mix. Okay, so I'm going to say plus 1/3. We don't need next high close. FOP, right? So straight up, it's a setup. Happy with it. Click save. So let's say it opens it, because we know we're going to open down tonight, 35.80. If you can be bothered staying up very early your time, very late my time, you could set an on-stop order with your broking platform for a couple of pips above the high, right? Whatever that is, 35.47, right? And then just go to bed. So you set it at 36.49. So the point is, you know, we're not jumping in just because it's cheaper, because it's not exhibiting the demand side control that we'd like. But if it was to open low and then start to move high through yesterday's high, then that's exhibiting that demand side control. So we're using that on-stop order to get us into that trade. Now, we don't know where it's going to finish, of course, but that's, I think, a valid way of doing it, rather than just saying, well, I'm just going to get in on the open today. Because then you're committing to getting in on the open if it opens at 34. Well, that's really cheap then, isn't it? But not cheap. Let's go to NEE, which is Next Era, if I'm not mistaken. Yeah, look, I think it still needs a little bit of work, probably just a dink. As a turnaround setup, it is officially a turnaround setup. We've got orange there. We're about to go light green on the short-term trend ribbon. Yes, there's high peaks and high troughs through here, but I just think it needs a dink, Adonis. So let's let this one cook a little bit longer. We've got a point of supply here. We've got a point of supply here. I don't think we're in any hurry. So something like this, and then, you know, just see any little pullback here. That higher trough, it might be a few days, but I think it'll be worth the wait on this one. Let's go to HSIC. Henry Skyen. Shine. Yeah, look, it's hit the uptrend ribbon. It's done its little dink. It's heading back up. I don't mind it. It's more of a range trade, isn't it? Right, it's more of a range trade, rather than one of those big long, you know, the highs are here, it's come down here, it's based around here, and now it's turning up. You get what I mean? This is more of a whoop, 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 and you're trying to get that whoop before it might whoop again. So I don't mind it. And this is, you know, this variety of setups idea. So yes, it's probably still one candle away from any of my criteria in terms of green trend ribbon, but I'm happy to forgive it that. Next high close, no, it doesn't need a next high close. The last candle is fine. So let's click that one. But, you know, where does it sit among the rest of the setups? Let's head back up the list. So don't type any more in, because I literally won't see them by the close. Thanks, Hayden. Okay, let's go to Perry. Otherwise, Perry's going to murder me if I miss his. Here we go. GE. Not DE. Oh, and not there either. Let's get rid of that. Let's do that. Let's do that. Maybe that. Do that. Oh, wow. GE is doing what? There you go. Oh, that is amazing. That's because they split it up, didn't they? So this is obviously the good bit. That's great. Yeah, no complaints about that. So let's go plus 1/3. Doesn't need a high close. Ready to go right away. Click save. Perfect. ATI, probably the best chart we've seen all night. ATI. Let's, yes, another very strong one. Just checking the weekly chart now. All good there. Look, I can't fault it. It is a little bit of a ways away from the light green ribbon. I'd love it to be a bit closer. But no, look, it's so strong. It's it's just invincible. And you know, this is a momentum play, and you know, it's definitely a wall of demand side control there. So absolutely yes. Let's go to TT, and I think if you know, in terms of again style of setups, it's the theme tonight. Of the ones like this is the best we've seen. TT, Trane Technologies. Perfect. I really like that because it's how it's done that little, like the dink at that point of supply was so mild. I mean, like that is the most special thing for me right there, those three candles, because that's how it dealt with the point of supply. like one day a bit quiet. Like that's how it dealt with that point of supply. It was quiet for about a day. It just speaks to the demand side control there. And again, you know, we're looking for consensus. We're looking for a stock where everybody's thinking the same way. Everybody wants to own it and nobody wants to sell it. And that's what this stock is. Plus 1/3 FRP. Brilliant. Love it. That's my favourite chart today so far. So we're on the right track. Let's go to CAH. Can we beat that one again? Yes, I think we can actually. That's pretty damn good as well. Maybe the other one still got this one pipped, only because of this shadow here says that, you know, hey, when it wants to, there is some supply out there for it on the right day. It came back so well. I mean, it just blitzed back. I mean, look at that candle there. The selling came out in the morning and then the demand just wiped them out. You can see from the volume and then pop here. And the weekly chart, I'm not going to see anything there either. So certainly, I didn't mean to go to the monthly, but still looks good. Those last two are definitely 1 and 2 setups on the day. Plus 1/3 FRP. And once again, thanks Perry for sharing those with us. And I think we're pretty close. There might have been, we did those two, and that's it. I thought there was one more out there, but I must be imagining it. No, here we go. Adonis, you typed yours in down the bottom, didn't you? Again, that's what I was thinking. I had to get to you, but you typed yours back in down the bottom. I've done yours. You certainly did. Okay, well, that's it then tonight, everybody. Let's head over to over to here, and do the disclaimer, which, as you all know, tells us that everything we've discussed tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this advice, you should consider carefully or seek the help of a financial professional to determine its appropriateness for you. Trading and risky is risky. Trading and investing, of course, is risky. It's important you understand that you're responsible for the stuff you do. You decide what's 7 out of 10, what's out of 10, what's 3 out of 10, David, and then you make those trades. Apart from that, it has been a pleasure chatting with you this evening. Hopefully you got a lot out of it, enjoyed it. I certainly enjoyed our time together, and look forward to catching you again in a week's time. All the best for your trading. Until then, bye-bye for now.